Free Cal, Mirae Asset has come up with a new fund offer called Mirae Asset Focused Fund. This would invest in 30 stocks across all market cap and sectors. So let's take a look at the features of this fund and why I think there's nothing special about it, and why there's no need for you to consider it. So this is an article that I wrote today, and so the NFO will open. It opened yesterday, and it will remain open until 7th May, and then after that it will open for continuous purchase because it's an open-ended fund from 15th May onwards. So many people believe that this is the reason why the Mirae India Equity Fund became a Mirae Large Cap Fund, and Mirae is launching this fund, and Anish just posted in a Facebook group, Asana Ideas Wealth, that it's also coming up with a new mid-cap fund. So they are trying to add new funds and reshuffle the categories. Well, it's a good thing or a bad thing, I don't know, but that's how AMCs work. They just keep getting, keep making new profits. They want new profits, more and more profits, and they want to. They do that by creating new products, making it sound special and interesting, and hopefully that will. Then they will ask their sales team to push the product and get AUM into it. But if you look at the promotional material in the Mirae Asset website, I found it quite insipid and dull. Now it says to generate long-term capital appreciation or income by investing in equity, blah blah blah. Okay, sorry, no, not that. Sorry, it says here an open-ended equity scheme investing in a maximum of 30 stocks, intending to focus in large mid-cap. It should say focus on 30 stocks across market cap, but it says it will focus in large, mid cap, small cap, mid and small cap. If it focuses there, that's like saying I'll focus everywhere. I mean, that's it's a poor first impression in my opinion. There's nothing special in its scheme information document that is not found in any of the other focus funds. The usual thing it says it will limit to maximum 30 stocks. That's the official regulation. For a fund to be focused fund, the maximum number of stocks should be 30. It says it will invest in strong growth companies, attractive investment ideas, and so on. That those things all AMC say. Then it says it will look at the liquidity of the stock, and it also make sure the risk is managed. It will do this, so let me scroll down. So it will do this by multiple ways. One is that it can operate as a hybrid fund, aggressive hybrid fund if it wants to. So it can hold 35% in bonds from time to time, and out of the total portfolio, it can invest in half of it can be in derivatives or hedging, but very rarely do fund managers go to that limits, and essentially that's about it. Then it will look at the liquidity of the trading volumes of the stocks. So these are ways in which it will try to make sure the concentration risk is lowered. So that's the major risk in a focused fund, concentration risk. Because it's only 30 stocks, the weightage per stock will increase. So to mitigate that, there has to be a proper diversification across market cap and across sectors. So the only reason why you would want to invest in this focus fund or any focus fund is that you are looking for a proper diversification across sectors and across market cap. This will happen when the fund AUM is low. This does not happen in other diversified funds, because if you see most diversified funds, they'll hold many of financial stocks. So that's the only reason you should be looking into this fund. The fund has a benchmark of Nifty 200, but that's essentially like a large cap benchmark, not much different from Nifty 100. So it says it will pick 30 stocks and try to beat the Nifty 200. Well, that's how these AMCs operate. There are now 17 such focused funds. I hope this is large enough for you to see this. There are 17 focused funds across the large cap and the multi-cap scheme. Multi-cap segments, and if I sort this in terms of AUM, you can notice that the largest AUM is only about 8,000 crores. So the AUM is quite low in the focus space, so we do not know whether these funds can remain focused when the AUM swells up. That's always a problem. Of course, Mirae has this habit of shutting down lump sum investments. It did it for the emerging blue chip, I think at around 3,300 or so AUM, and so since then not opened it at all. So they could well do this to this kind of a fund as well later on if the AUM grows. Of course, there's still time for all that. So the question is, my gut tells me that look, there's nothing special in this. I mean, if you look at the SID, the scheme document of scheme information document of all the other focus fund, you would find similar wordings. So there's nothing special about this. There's nothing compelling for you to invest in it. As an analyst, I will just wait and watch before suggesting this to anybody. But as an investor, you should, first of all, you should consider any fund, whether this fund or any other fund, only if there's a need for it in the portfolio. For many people, there will be no need for this kind of a fund, or any NFO for that matter. So most people should not even be considering this fund. Second of all, don't say I will take small exposure because it looks interesting to me. Remember what I talked to you about small exposure syndrome. That will not make any difference in your portfolio if you just take 5%, 10% exposure. If you want to take exposure in this focus fund, take a good exposure, 30% exposure. If you have if you are brave enough to do so. So the only question then is, so if you have no need for it, there's obviously no need to look into it. If you think there is a room for a focused fund in your portfolio, it has to be in significant amounts. Then there's a question of choosing this NFO or choosing an established fund. But you can argue that established focus funds will kind of become large cap tilted, and you can say if I start with a new fund like this on a fresh slate, then there will be good diversification across market cap. So you can take. So if you think if you trust Mirae's performance, you can consider buying this, but you must have the courage to buy an NFO on that too in that kind of weights. So, but of course, it's not about courage actually, confidence I would say, because fund selection is not important. You should know when to, you should know how to review a fund periodically and when to stop investing in it and when to switch over. That is more important. So, if there is space or / room in your portfolio, consider this, but consider this only if you can invest enough. If you, I'm pretty sure for most people, there will be no room for it, there will be no space for it, and most people will not have the guts to take heavy exposure in such a fund. So, please stay away. This is just another focused fund. There are multiple focused funds. There's absolutely nothing special about it. Let it perform and see. But if you wait for it to perform and see, at that time you will not have any room for it in your portfolio as well. So, as an analyst, let us wait for it to perform. As an investor, just leave it. So that's what I wanted to say. I'll catch you again in another video. Thank you as always.